Hi, my name is Keith. So DERIV has added a new trade type called turbos. So in this video, I'm going to explain what they are and why you should not trade it. So let me just show you where you can find the new trade type. So the new trade type is only found if you're using DERIV Trader. Okay, the first trading platform that you see once you just log into DERIV. So when I click here on multiply, I'm going to see there's a new trade type called turbos. So what are tables? Okay, so the table options, so these are actual options, and when I say options, it's all about either buying or selling. So there are options, okay, that allow you to earn a potentially high payout if your market predictions are right and if the price does not touch or breach the determined barrier. So what does this mean? So let me just explain what these are. So we'll start with, there are two types of tables. There is long, okay, and short. Okay, so long simply you're buying, short means you're selling. So there are only two types of orders that you can actually make. So let's start with long. So long, it means you're going to be buying. So the first thing you have to do is you have to set a barrier. So a barrier is more like a starting point, okay? So since it's buying, okay, since you are buying, so you expect price to move like this, okay? Imagine this is price, okay? Then when you are buying using the table trade type, okay, you also set the duration, okay? For example, if I predict that by tomorrow, okay, the price of Bitcoin will go up, so I need to set from now until tomorrow how many hours are remaining. So you can set either in 5 hours, in 8 hours. So you can set it by 8 hours tomorrow. The price of one Bitcoin would have reached, let us say, 90K. Okay, by tomorrow, let us say by tomorrow at the same time, by tomorrow 9 hours, the price of one Bitcoin may reach $90,000. So if price does move and by the time you specified it does reach here, you're going to earn money, okay, a high payout. But if by tomorrow, okay, instead it does not reach this level and instead just goes the opposite direction, you're going to lose. So what you're going to lose is the amount you stake. So either way, you're going to continue staking. Then when it comes to short, again, the other thing you're going to do is actually it's selling. So you're going to have a barrier more like a starting point. And when you sell, you do not want price to come up. So price will come from down to move, it will cross over the barrier. And when it reaches a certain level that you've specified within the period, okay, you're going to earn money. But if it goes sideways, you're going to lose money. But what am I saying? Why should you not trade this type of uh this trade type called tables? So here is the catch. So when it comes to tables, you can only trade them on derived indices. So when you go to, okay, when I click here, okay, there is derived forex, stock indices, cryptocurrencies, and commodities. So you can only use this trade type to derived synthetic indices. So what are synthetic indices? Well, these are computer generated indices and you only trade them by making use of technical analysis. You cannot make use of fundamental or sentiment analysis. If you're good with charts, yeah, this is what you trade with. Now, here is the hard part. Not really the hard part, is the funny part. So, I like the idea of tables, but the idea of tables can only work best if you trade currencies, stocks, and cryptocurrencies, because with this type of assets, you can actually make use of fundamental and sentiment analysis. Okay, it's easier to predict. For example, the price of Bitcoin. Bitcoin really has been okay going up and up and up and up. So it's easier like to predict like what will happen within a few hours or within a few days. But the thing is, you can't just predict when it comes to synthetic indices. These are computer generated, and the only way of trading them is by making use of technical analysis. But if you're going to trade tables, okay, yeah, you can as well make use of technical analysis, but the best which would work better is if you it was possible to use tables on in crypto, but unfortunately it's not possible, and this is why I'm saying you should not trade tables. Okay, because why am I saying so? Because you choose the duration, right? You choose the duration, you choose the amount you're willing to lose, which is the stake. Okay, and all you do is simply wait for things to happen. So it's much easier if you are trading currencies and stocks. But either way, it can still work with technical analysis by trading these computer generated indices. But that's just my opinion according to my experience. So that's how it actually works. Okay, so let me just show you something. So in case you did not understand what I just explained, let me make use of the DERIV charts. So I'll include the link to this page where it explains about what tables are. So this is what I was trying to explain. So when you go along, it means you're buying. So the start is the barrier, right? So when you buy, you expect price to reach a certain level within the specified time, and you're going to have a payout. But if it goes the opposite, you're going to be knocked out, which means you're going to lose money. Short, which is selling, okay, you expect price not to go above the barrier, okay, within a specified time, and you make money. If not, you're going to lose money if it's the opposite. So now let me just show you here. So all you need to do is log into DTrader, click on tables. Then when you click on tables, choose what you'd like to trade, right? So for example, if you want to trade volatility 25. So this level here in the blue line is the barrier. So we're going to choose minutes. So for now, you can choose between 1 and 1440. So 1 minute and a year. So the thing is, you can have a trade running for almost a year. Okay. So for example, if I think like by tomorrow, okay, by tomorrow, the volatility 25 maybe will reach the level 23, 28, which is here. What I need to do is maybe add a few more minutes. Let us say I'd like to add let's say 60 minutes times 9. So 540, let me say I'd like to add not 540, maybe just 540 minutes. 540. Let me say I add 540 minutes. Then now all I need to do is choose the amount I'm willing to stake. Maybe let us say so the maximum I can stake is 769. Maybe I'll enter $500. Okay, then the barrier. Remember, you can change where the barrier you want it to be. So click on this spot so you can choose. For example, if I choose minus 65, okay, here is the blue line. If I choose 15, here is the blue line. Okay, if I choose, so I think yeah, I now chose 0.17966. This is the barrier. So remember, it's current on the long, so which means I have to buy, right? And when I buy, I don't expect price to reverse and cross the blue line, otherwise I'll make a loss. Okay, so and if I click on short, okay, it means that I don't expect price to cross over and go up. Then all I need to do is simply click on short. So remember, I am staking $500, okay, and I'm going to end this payout. Remember, the payout is always changing depending on where to reach by the specified time, so it's not really fixed. It depends with how it will react. So one thing you may have in like a question is that can you close the treble type of trade before it expires, before the time? So unfortunately you cannot close, but according to this page, it's saying that you can only close within 15 seconds when it's about to expire, which is nothing. Because 15 seconds is nothing, you've already lost. At least if it was to allow you maybe like the way these other normal options are. So I feel as if I've talked a lot. I don't know if I've understood, but if you have, give this video a like. For more videos like this, go on and subscribe. This is Keith. Bye for now.